So if a factory can make it, the price is going down. If a politician can print it or declare it, the price is going down. So why is it going up? Well, for the last 10 years, it's been appreciating 60% a year on average. For the past 4 years, 60% a year. And it just climbs up with some volatility. You know, it surges up, it crashes down, it surges up, it crashes down, serpentine. And as it climbs, it becomes a greater amount of the world's capital. Instead of being $2 trillion, it becomes $280 trillion. But you know, the amount of wealth in the world goes from 900 trillion to 4,000 trillion. And it's not like Bitcoin eats everything. It's just like Bitcoin goes from being 1/10 of 1% of the world's wealth, you know, to being 7% of the world's wealth. You don't want to store your monetary wealth in anything that human ingenuity or politics creates more of.
As the world sinks deeper into debt and money continues to be printed endlessly, Bitcoin keeps climbing, and according to Michael Saylor, it's only just beginning. The executive chairman of MicroStrategy believes Bitcoin is on the verge of one of its most explosive price surges yet. With thousands of US companies starting to buy in, demand is skyrocketing. But Saylor says this is only the start. He sees it as the opening act to a flood of institutional investment, from sovereign wealth funds and major corporations to entire governments. In his eyes, this momentum could soon embed Bitcoin into corporate balance sheets around the globe. Stick around until the end of the video, where Michael Saylor explains why Bitcoin might just be at the heart of the biggest wealth transfer in modern history.
Stop. You don't have time. Don't miss out this 2025 bull run. Educate yourself first ahead of the crowd. We have created the ultimate step-by-step crypto cheat guide that will guide you this bull run. Unlock the secrets of crypto and make smarter investments today. Now by clicking on the link below to get your exclusive copy just under $10.
So the general idea is the currency supply is increasing. There are certain scarce desirable assets that are not increasing very fast. Bitcoin is hard capped. It's not increasing at all. So why is it going up to 13 million a coin? Well, for the last 10 years, it's been appreciating 60% a year on average. For the past 4 years, 60% a year. Okay, the S&P index is increasing about 15% a year for the past 4 years. The money supply, the dollar, is increasing somewhere between 7 and 10% a year, maybe 10% a year for the past 4 years. So once you understand that, Bitcoin is simpler, more thermodynamically sound than an equity portfolio, right? The thing that's going up a bit faster than the inflation rate is a diversified portfolio of high quality companies like Tesla and Apple and Google and the like. They can maybe outperform a couple of percent due to human ingenuity and robots and AI and Moore's law technology. But companies have attack surfaces. So companies have counterparty risk. The risk factors of companies are, they might get sued for antitrust. You know, China doesn't like NVIDIA. Europe might tax Apple. A union might unionize Amazon. The US government might sue Microsoft, right? If it's a really good company, it's going to get a regulatory onslaught. And if it's a bad company, it's going to get crushed by a bigger company. Or maybe you're located in a city and the tax rate triples. And so there's a parade of horribles that cause you to lose money on a corporate investment or a financial investment. Or maybe you have the best company in the world and it happens to be in Venezuela and the government changes. Or, you know, the people used to have really good companies in Cuba and then Castro took over. And then all of a sudden it becomes illegal or the currency collapses or they expropriate your property. You have the best oil company in Venezuela and then the government takes it. Okay, or maybe you have a great company in Russia and the currency collapses like it did in '98. Or maybe you have a great company in Brazil and the currency collapses like it did about 30 years ago. And so things that are in the real world, things that are subject to political fate. What is Bitcoin? Well, it's not in the real world. It's not a company. There's no counterparty risk to a company, no counterparty risk to a culture, no counterparty risk to a currency, no counterparty risk to a creditor, right? You're stripping away counterparty risks. And so when you strip away all the risk, you get pure digital property. Why is it going to go up? It's going to go up because capital is flowing from the more entropic state, from the state of anxiety and risk and confusion, toward the more ordered state, a less risky state. Think of water at the top of a mountain. Why does the water flow downhill? Accidental? The waterfall. Scary turbulence? But what if it stops? It's flowing downhill because of physics, because it's a lower energy state for the water to be at sea level than for the water to be 1 mile up. Why is money flowing into Bitcoin? Well, I'm going to take all your money, put it in random countries and random banks in Africa. And then I say, okay, it's Monday morning. Your money's in random banks and random countries in Africa. Would you like to bring it back to the US, or would you like to leave it there? Right? Accidental? No. You're going to bring it back to a place you feel comfortable. Capital flows to security. It flows to where it's treated the best. And so money is flowing, capital, I'm using money as a phrase for long-term capital. It's flowing into Bitcoin because it's running away from Russia, and it's running away from China, and it's running away from Africa, and it's running away from Venezuela and Cuba, and it's running away from South America. It's even running away from Europe. If you ask the Europeans, the very simple test, do you prefer the digital dollar or the digital euro? 99-1, they prefer the dollar to the euro. In their own country, they don't want the euro. Everybody wants the dollar. Everybody wants to live in the US. Everybody wants their property in the safe apex network of the world. So the capital is flowing into Bitcoin at 60%. The traditional method of storing your long-term capital as the S&P index is 15%. What's going to happen is that more and more capital is going to flow from the 15% to the 60%. More capital is going to flow from the 20th century to the 21st century.
Michael Saylor is more confident than ever that the explosive rise of crypto is only just beginning. He predicts a major surge by the end of 2025, with over 1.1 billion active crypto wallets expected globally. Saylor describes the growth as nearly unimaginable, calling it the fastest accumulation of wealth in human history. After years of deep research, he says all the data, every chart and every trend, points to one undeniable conclusion: liquidity is king, and crypto is poised to outperform every other asset class in the market.
We're in the final phase of this bull run. Let me guide you. We've launched DailyDoseCrypto Alpha, a free private Telegram group just for the DailyDoseCrypto family. Inside, I'll guide you through profit-taking strategies, real trading tactics, long-term crypto investing mindset. Only 500 spaces available, then it's closed. If you're serious about this bull run, click the private link to join now.
I think everybody that has a long-term capital plan, if you have a portfolio of assets, or if you have money that you don't need for 4 years, I think the reasonable thing to do is you want to have some portion of it in digital property, in digital capital. That's Bitcoin. And I think 1%, 2% is like an insurance policy. You're buying an insurance policy so you won't be totally wrecked. Bitcoin simply represents the highest form, the least disorderly, least risky form of property rights. The 60% will track toward the 15. So over time, the S&P index and Bitcoin will head toward each other. So what do I expect? I think Bitcoin, as it gets bigger, it goes from 60% growth rate to 58 to 55 to 52 to 50 to 48 to 38 to 35 to 33. And the traditional world, the 500, the $150 trillion of traditional equities, that's basically a 15%er or 12 to 15%er, they'll start to incorporate Bitcoin. Maybe they'll start to creep up toward Bitcoin, but they'll also struggle with all the entropic risk and competition. And so as people get more comfortable with Bitcoin, they're going to move money toward Bitcoin. And then companies like MicroStrategy, well, we're going to create an equity that pulls capital from the equity capital markets, from the Magnificent Seven, from the S&P. It'll flow into MicroStrategy stock. So the reason that the value of scarce, desirable stuff goes up is because it's difficult to manufacture with a factory. If technology, or if a robot can create it, if a technologist can make it cheaper, if it's subject to Moore's law, if the AI can spit it out, You don't want to store your monetary wealth in anything that human ingenuity or politics creates more of. Bitcoin is the world's first perfect monetary asset. And by perfect, I mean hard capped at some fixed amount. Every other monetary asset you could use as a long-term store of value has some leakage or inflation in it, whether it's gold or silver or real estate or art or whatever it is. There's entropy, there's degradation. And so the ideal perfect monetary asset would be some fixed amount of something for the next 1,000 years or 10,000 years. And so Bitcoin's the first thing like that. Even things we think that are scarce, like real estate, we can make more real estate. We make more waterfront property even. Half of Boston and half of Miami Beach is man-made waterfront property. So you start with that idea of scarcity. So why does it go up in value? It goes up because the supply of dollars is increasing 7% a year for the past 100 years. And the supply of weak currencies is more like 14% a year. And that means the dollar loses 99.9% of its value over 100 years. A weak currency would lose 99.9% of its value sometimes over 20 years. I think Bitcoin definitely ought to be part of that portfolio. I mean, everybody's got to decide what percentage of their portfolio. But at this point, we've moved past the point where you would be thinking that the government's going to ban it or take away from you. You're just buying digital property. It's the future of money. Me defining money as long-term store of value. I mean, you're not going to get rich by holding currencies in your pocket. You ought to minimize the amount of currency you hold. But if you want to get rich, the time-tested way to get rich is levered long property. You buy scarce, desirable property, and that will preserve your wealth. The way you preserve your wealth is you buy scarce, desirable property. The way you get wealth, the way you create wealth, is you borrow the money from the bank to buy the property.
Saylor argues that widely used metrics like inflation rates and labor statistics are often manipulated to serve specific narratives, rather than reveal the true state of the economy. In contrast, he sees Bitcoin as a transparent alternative, an asset with a fixed supply, immune to central control and political distortion. He also believes that legacy tech giants like Apple, Amazon, and Google are quietly preparing to accumulate large amounts of Bitcoin through spot ETF. Leveraging their long-standing financial networks, these companies can gain significant exposure to Bitcoin without the hassle of buying it directly, giving them a major edge as institutional adoption accelerates. To Saylor, this marks the beginning of a massive shift already underway. He urges investors to act now, before traditional finance takes over, and embrace Bitcoin as a gateway to a stronger, more resilient financial future. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.